Hey, what's going on? Will Burgess here from Real Estate Investment Pro, and today we're going to be talking about stocks versus real estate. Which is the better investment? Everyone knows that real estate's a good investment. My question for you is then, why isn't everyone doing it? In this video, I'm going to be comparing stocks to real estate and explaining the 4 biggest factors that allow real estate to outperform stocks time and time again. Before I get into it, the first thing that we want to understand is that comparing real estate to stocks isn't really comparing apples to apples. Real estate is something real. You're buying a building. You can go and visit it. You can go and touch it. Stocks, on the other hand, they're just a piece of paper representing a small portion of ownership in the company. The difference may seem obvious, but it can play a big factor in your understanding. When the stock market changes, the price goes up, down, that piece of paper becomes more or less valuable, right? Well, it's actually not that simple anymore. The market has evolved so far from trading apples in a square that it's almost unrecognizable. The stock market is no longer about picking winning companies with strong financials. It's changed to the point where now we have multi-billion-dollar companies trying to buy and build the fastest computers on the planet to clock speeds at a fraction of a second faster than their competitors, just so they can take advantage of microscopic changes in the market. So what chance do you and I have? Even if we're sitting in front of a computer all day, poised, ready to go, we're still playing a game against giants. Real estate, on the other hand, although the market price does fluctuate, it does so much more slowly and predictably. The value of a building can still be assessed in large part by comparables. If building A down the street, of similar size, layout, number of bedrooms and bathrooms sold for $1 million, then the value of building B should be approximately the same. It's this difference that can play a big part in predictable and stable returns. Plus, you don't need to be sitting in front of your computer waiting to react instantly to changes in the news or the market. The real estate market moves slowly over the course of months, and it has lots of economic indicators that can help you predict what's going to happen. This will give you enough time to come up with a plan and make the right decisions. Although in my opinion, this slower pace and value fluctuation is an advantage, it comes at a price. That's liquidity. You can't exactly buy and sell investment properties with the same ease that you can stocks, bonds, or mutual funds. Again, to some, this may be a bad thing, but to me, I want to go to sleep at night without worrying if my life savings are going to be wiped out by some supercomputer. Now, let's get into the 4 reasons why I love real estate. Number 1, cash flow. When buying real estate, if you purchased it right at the beginning, at the end of every month, you're going to have extra money in the bank. We call this positive cash flow. How it works is simple. You collect the total rent, and then you minus all the expenses like the mortgage, the property tax, utilities, insurance, property management, maintenance, vacancy allowance. After all these expenses are paid, you should have cash left over. In the world of stocks, you can argue that certain stocks pay dividends. I agree, dividends are great. They played a big part in my early wealth building strategies until I figured out that, hey, I have no control. In real estate, I can cut, change, or remove expenses altogether to help with my cash flow. I can also increase rents or find other creative ways to generate more income from the properties I own. Moving on to number 2, mortgage paydown, also known as equity building. Another big plus to real estate investing is it's a forced savings account. Most of us are terrible at saving money. I can quote 100 different stats to prove this, but for now, you should know that 56% of millennials have no money in a retirement account, and 39% of baby boomers don't have nearly enough set aside for their upcoming retirement. Well, how does mortgage paydown help? Well, regardless of if your property is cash flow positive or cash flow negative at the end of the month, your mortgage is getting paid down, and this increases your equity. The mortgage is usually the largest chunk of your expenses, so regardless of if you see it or not, the building is being paid down and your wealth is growing. Your tenants are paying down the mortgage for you. Now, you can't do that with stocks. Speaking of more things you can't do with stocks, let's start talking about number 3, leverage. Leverage is a simple act of using borrowed money to amplify your return on investment. Although it can be done in stocks, it's not very common. To give you an example, let's imagine you walk into a bank and tell them, I have $100,000 and I'd like to borrow $400,000 to invest in stocks or mutual funds. Now, unless you have some serious assets and you're willing to sign a phone book of guarantees, you're probably going to be laughed out of the building. Now, let's take the same scenario, walk into the bank asking for $400,000 to purchase a rental property. This is going to be a totally different story. They're probably going to welcome you into their office and pour you a coffee. You see, it's funny to me that the banks themselves, the same institutions that advertise mutual funds and that have tellers sell you on their investments, they're not even willing to use those same investments as collateral. So getting back to why leverage is so great, let's look at that same $100,000. If I put 100 grand in stocks, and let's say I get an awesome return that year of 10%, I'll have $110,000. Now let's look at a property we just bought. We take $100,000 or 20% down on a $500,000 property. That property increases in value only 5%, just half of what the stock market did that year. We just made $25,000 or a 25% return on our initial $100,000 investment. We call this 25% a cash on cash return. The fourth and last reason I love real estate is appreciation. With few exceptions, real estate increases in value every single year. There's lots of factors that play into this, but if you've ever heard stories about when your parents were young and they bought their house for $50,000, now it's worth $600,000, that's an example of appreciation. Although I love appreciation, I never factor it into my investment calculations. It's just nice to know that as the government prints more and more money and inflation goes up, my properties are also going up in value. Well, there you have it, the 4 reasons I choose to invest in real estate over stocks. If you'd like to learn more about how I invest in real estate and how I was able to retire within just a few short years of starting, you can check out my full course, realestateinvestmentpro.com. In there, I'll be going in depth into all the different steps that I take, and I'll be teaching you the ins and outs about how to find, fund, and analyze real estate investment opportunities. This is the ultimate real estate investment course. The link is going to be in the description below. But that's it for now. Hopefully you enjoyed this video. Hopefully it's helpful. And to get more content just like this, don't forget to subscribe. And if you have any questions, let me know.